Based on the historical data and forecast, Bitcoin shows a slight downtrend in the recent forecast period, with prices expected to range between $80,100 and $82,800. The RSI consistently hovers around the 40 to 50 range, indicating neither strong overbought nor oversold conditions. However, the Bollinger Band suggests potential volatility. Given the support price of $82,300, I recommend a cautious strategy focusing on potential rebounds. We will implement a strategy based on the RSI, targeting oversold conditions. When the RSI falls below 40, we will enter a long position at $82,300, placing a stop loss at $81,800 to limit potential losses. Our target price will be $84,000, aiming to capitalize on a potential bounce from the support level. To refine the strategy, we will incorporate the Bollinger Bands. If the price touches the lower band of the Bollinger Bands, which is around $80,100, it confirms an oversold condition, strengthening our entry signal. In this scenario, we will enter a long position at $80,100 with a stop loss at $79,600 and a target price of $82,500. This strategy combines the RSI and Bollinger Bands to identify high-probability entry points, managing risk with well-defined stop-loss levels and setting realistic profit targets. Combining these two strategies, we will prioritize the strategy with the lower entry price, which is $80,100. Based on the historical data and forecast, Bitcoin Cash shows a downtrend. The price has been fluctuating within a range, with support at $299 and resistance at $313. The RSI indicates oversold conditions recently, with values dipping below 40, suggesting a potential bounce. However, the forecast for the next week predicts a continued downward movement, with prices hovering around $300. Considering these factors, I propose a short selling strategy with a conservative approach. Entry price will be $309. The stop loss will be set at $315 to protect against a sudden upward reversal. The initial target price will be $306, aiming for a modest profit. We will then adjust the target price to $302 if the price reaches $306. If the price continues to decline, we will adjust the target price to $299. This strategy combines RSI signals with the overall downtrend and forecast data to maximize potential returns while minimizing risk. Based on the historical data and forecast, STRK shows a downtrend. The price has been declining from $0.724 to $0.606 over the past 2 weeks, and the forecast indicates further decline to $0.535. The RSI consistently remains below 50, fluctuating between 35.3 and 52.6, indicating a weak upward momentum. The Bollinger Bands are narrowing, suggesting decreasing volatility, and the price is approaching the lower band, which further confirms the downtrend. Therefore, I recommend a short position strategy. My strategy is to initiate a short position at $0.606. The stop loss should be set at $0.622 to protect against potential short-term upward spikes. The target price is $0.535, aligning with the forecast price. This strategy combines the RSI, Bollinger Bands, and forecast data to maximize potential returns while minimizing risk. The RSI below 50 confirms the downtrend, while the price approaching the lower Bollinger Band reinforces the bearish outlook. The forecast provides a clear target price, allowing for a defined profit-taking point. Based on the historical data and forecast, Ethereum exhibits a downtrend, particularly evident in the recent decline to $1,820 and the projected decrease to $1,700. The RSI consistently hovers below 50, indicating weakening momentum. The Bollinger Bands show a narrowing trend, suggesting a period of consolidation before a potential breakout. Given these factors, I propose a short selling strategy. Enter a short position at $1,810, placing a stop-loss order at $1,830 to limit potential losses. The initial target price is $1,750, aiming to capitalize on the anticipated downward movement. To refine the strategy, I incorporate the RSI and Bollinger Band signals. When the RSI falls below 30, indicating an oversold condition, consider a partial covering of the short position. The bottom of the Bollinger Bands acting as a support level. If the price reaches $1,730, it's a strong indication of further downside potential. Therefore, adjust the target price to $1,700. This multi-layered approach combines trend analysis, RSI signals, and Bollinger Band support to maximize profit potential while effectively managing risk. Based on the historical data and forecast, XRP shows a declining trend, with the forecast indicating a potential further decrease in price. The RSI consistently remains below 80, suggesting the asset is not overbought, but the recent dip below 40 indicates a potential oversold condition. The Bollinger Bands show that the price is approaching the lower band, suggesting a possible rebound. Therefore, I recommend a contrarian strategy focusing on short-term gains. My recommended strategy is to enter a long position at $2.05, anticipating a bounce from the lower Bollinger Band and the potential oversold RSI level. Set a stop-loss order at $1.94 to protect against further downside risk if the downtrend continues. A target price of $2.35 is set, aligning with the upper Bollinger Band and a significant portion of the recent trading range. This strategy aims to capitalize on short-term price fluctuations and offers a reasonable risk-reward ratio. Based on the historical data and forecast, Binance Coin shows a fluctuating trend with periods of consolidation and minor upward movement. The RSI consistently hovers around the 50 mark, indicating neither strong overbought nor oversold conditions. However, the recent dip in RSI to 46.4 and 46.1 suggests a potential temporary oversold condition. Considering the forecast prices for the next week, which are generally declining from $607 to $595, and the support price of $587, a conservative strategy is warranted. I propose a strategy focused on capitalizing on potential short-term rebounds from the oversold condition. The entry price will be $601, coinciding with the lowest forecast price and a recent dip in the RSI. The stop loss will be set at $587, the established support level, to protect against a further decline. The initial target price will be $636, the resistance level, aiming for a quick profit. If the price reaches the target, we will reassess the situation. If the price continues to fall, the stop loss will be adjusted to the center of the Bollinger Bands to minimize losses. This strategy combines RSI and Bollinger Bands for enhanced risk management and aims to capture short-term price fluctuations. Based on the historical data and forecast, Stellar exhibits a downtrend, supported by the declining forecast prices from 0.274 to 0.248 over the next week. The RSI consistently remains below 60, indicating a lack of strong bullish momentum. Considering the support price of 0.242 and the recent price action, I recommend a short position strategy. We will enter a short position at $0.267. The stop loss will be set at $0.277, just above the recent high and the upper Bollinger Band. The initial target price will be $0.254, aligning with the forecast price and a conservative downward projection. To optimize returns, we will implement a dynamic trailing stop-loss strategy. Once the price reaches $0.254, we will move the stop-loss to $0.25. If the price continues to decline, we will adjust the stop-loss further down to $0.24. The final target price will be $0.248, coinciding with the forecast price at the end of the week. This strategy combines RSI signals, Bollinger Bands, and forecast data to capitalize on the anticipated downtrend while mitigating risk with well-defined stop-loss levels. Based on the historical data and forecast, Toncoin shows an upward trend. The price has consistently tested the support level of $3.86 and has been bouncing back. The RSI values fluctuate between 54.8 and 66.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility. Considering the forecast for the next week, with prices ranging from $3.91 to $4.11, I recommend a long position strategy. We will use a combined strategy leveraging RSI and Bollinger Bands. My strategy involves entering a long position at $3.91. The stop loss will be set at $3.86, just below the established support level, to protect against potential downside risks. The initial target price will be $4.11, aligning with the forecast high for the week. If the price reaches $4.11, we will move the stop loss to the recent swing low around $3.95, securing profits while allowing for further upside. This combined strategy aims to capitalize on the upward trend while managing risk effectively. Based on the historical data and forecast, Cardano exhibits a downtrend, particularly noticeable in the recent forecast period with prices declining from $0.743 to $0.639. The RSI consistently hovers around the 40 to 50 range, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands suggest potential volatility. The price recently touched the bottom of the Bollinger Bands, which could signal a short-term bounce. Given this, I recommend a contrarian strategy focusing on short-term price movements. My proposed strategy is to initiate a long position at $0.652, anticipating a potential bounce from the lower Bollinger Band and support level of $0.632. Place a stop-loss order at $0.639 to mitigate potential losses if the downtrend continues. Set a target price of $0.685, aiming to capture a small profit from a potential short-term recovery. This strategy balances risk with a reasonable profit target, capitalizing on potential short-term volatility while protecting against further downside. The RSI is not in the oversold zone, so we will not be able to take advantage of the RSI strategy. Based on the historical data and forecast, Litecoin exhibits a clear downtrend. The price has been declining since March 18, 2025, and the forecast for the next week predicts further decreases, potentially reaching $73. The RSI consistently remains below 50, indicating a bearish momentum, with recent values hovering around 32.4, which suggests an oversold condition. Considering the Bollinger Bands, the price has been trading near the lower band, further confirming the downward trend. Therefore, a short selling strategy is recommended. We will enter a short position at $81.4, placing a stop-loss order at $86.3 to protect against unexpected upward movements. Our initial target price will be $78.7, aiming to capitalize on the anticipated decline. To maximize returns, we will implement a dynamic trading approach. If the price reaches the initial target of $78.7, we will move the stop-loss to the entry price of $81.4, securing profits and limiting potential losses. If the price continues to fall, we will further adjust the target price to $73, reflecting the latest forecast. The RSI readings suggest a potential for a bounce, but the overall trend remains bearish. This strategy combines technical indicators and forecast data to create a high-probability trading opportunity, with clear entry, stop-loss, and target levels to manage risk and maximize potential gains. Based on the historical data and forecast, Switchcoin shows a declining trend. The RSI consistently remains below 80, indicating that the asset is not overbought. However, the RSI has fluctuated between 40 and 57, suggesting periods of both oversold and slightly overbought conditions. The Bollinger Bands indicate volatility, with the price frequently touching the upper and lower bands. The forecast for the next week predicts a continued decline, dropping from 2.24 to 1.99. Considering these factors, I recommend a short position strategy. The entry price will be $2.24, coinciding with the first day of the forecast period. The stop-loss will be set at $2.46, just above the recent resistance level, to limit potential losses if the price unexpectedly reverses. The initial target price will be $2.18, aligning with the forecast for April 2, 2025. If the price reaches $2.18, we will adjust the stop-loss to the entry price of $2.24 and set a new target price of $2.07, based on the forecast for April 3, 2025. Further, if the price reaches $2.07, adjust the stop-loss to $2.18 and set the target price to $2, based on the forecast for April 4, 2025. Finally, if the price reaches $2, adjust the stop-loss to $2.07 and set the target price to $1.99, based on the forecast for April 7, 2025. This strategy combines the declining trend, RSI readings, and Bollinger Band's volatility to maximize potential returns while managing risk. Based on the historical data and forecast, APTUS has shown volatility, with a recent dip towards the support level of $5.23. The forecast for the next week indicates a downward trend, with prices potentially reaching $4.8. The RSI consistently fluctuates, but has recently entered oversold territory, suggesting a potential buying opportunity. Considering the Bollinger Bands, the price is currently near the lower band, indicating a potential bounce. Therefore, I recommend a contrarian strategy focusing on short-term gains. My strategy is to enter a long position at $5.24. Given the downward forecast and potential for further decline, I will set a stop loss at $5.08. The initial target price will be $5.43, aiming to capitalize on a potential bounce from the oversold RSI and a move towards the center of the Bollinger Bands. If the price reaches $5.43, I will reevaluate the situation and potentially extend the target price towards $5.62, the recent resistance level. This strategy aims to capture a quick profit from a potential short-term reversal while mitigating risk with a conservative stop loss. Based on the historical data and forecast, SE shows a downtrend. The price has been consistently decreasing from $0.21 to $0.17. The support price is consistently at $0.103, and the resistance is at $0.206. The RSI is consistently below 50, indicating a weakening momentum, and it has recently dipped below 35, suggesting an oversold condition. The Bollinger Bands are narrowing, which often precedes a significant price movement. Given the forecast of continued decline, I recommend a short selling strategy. We will enter a short position at $0.177. The stop loss will be set at $0.185, just above the upper Bollinger Band to avoid being trapped in a potential short-term bounce. The target price is $0.15, aligning with the forecast and providing a substantial profit margin. The RSI is currently oversold, suggesting a potential bounce, but the overall trend remains bearish. This strategy combines the bearish trend, oversold RSI, and Bollinger Bands analysis to maximize potential returns while mitigating risk. Based on the historical data and forecast, Ethereum Classic is showing a downtrend, particularly evident in the recent price action and the projected decrease over the next week. The RSI consistently hovers below 50, indicating weakening momentum, and the forecast price suggests further decline. Considering the support price of $16.5 and the forecast, I recommend a short position strategy. We will enter a short position at $16.7. The stop loss will be set at $17.2, just above the recent resistance and the top of the Bollinger Bands. The initial target price will be $16.2, aligning with the forecast for April 7, 2025. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the bottom of the Bollinger Bands at $16.3, it might signal a potential bounce. However, given the overall downtrend, we'll maintain the short position. We will adjust the target price to $16 if the RSI drops below 30, indicating an oversold condition. This combined strategy, blending RSI and Bollinger Bands analysis with the forecast, aims to capitalize on the anticipated decline in Ethereum Classic while managing risk effectively. Based on the historical data and forecast, Polygon exhibits a downtrend. The RSI consistently stays below 50, indicating prevailing selling pressure. The forecast for the next week predicts a continued decline, with prices dropping to 0.179. We will implement a short selling strategy capitalizing on this downward momentum. Initially, we will enter a short position at $0.202. To mitigate risk, we'll set a stop loss at $0.214, just above the upper Bollinger Band, which suggests a potential reversal. Our target price will be $0.185, aligning with the forecast and providing a substantial profit margin. To refine our strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential oversold condition and a possible bounce. Conversely, touching the upper band suggests overbought and a likely pullback. Given the consistent downward trend and the forecast, we'll prioritize the short selling strategy with a tighter stop loss. If the price reaches $0.187, we will take profit. This combined approach, leveraging both RSI and Bollinger Bands, aims to maximize returns while effectively managing risk. The final portfolio will be 70% short selling strategy and 30% RSI strategy. Based on the historical data and forecast, AEVO exhibits a downtrend. The price has been consistently declining from 0.123 to a forecasted 0.0933. The RSI values are generally below 50, indicating a bearish momentum, with recent readings nearing oversold territory. The Bollinger Bands show that the price is approaching the lower band, further reinforcing the downtrend. Considering these factors, I recommend a short position strategy. We will enter a short position at $0.108, coinciding with the support level and the beginning of the forecast period. To manage risk, set a stop-loss order at $0.114, slightly above the recent high. The initial target price is $0.101, aligning with the forecast for April 1, 2025. To maximize potential returns, we will implement a dynamic strategy. If the price reaches the initial target of $0.101, we will move the stop loss to the entry price of $0.108, effectively locking in profits. If the price continues to decline, we will adjust the target price to $0.0966, based on the forecast for April 2, 2025. Finally, if the price reaches $0.0933, the ultimate target, we will close the position. This strategy combines technical indicators, support and resistance levels, and forecast data to capitalize on the predicted downtrend of AEVO, while also incorporating risk management techniques to protect capital and secure profits. Based on the historical data and forecast, optimism demonstrates a downtrend, particularly evident in the recent forecast prices, which are consistently declining. The RSI consistently hovers around the mid-range, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands show a contraction, suggesting increasing volatility and a potential breakout. Considering this, I recommend a short-term short position strategy. Enter a short position at $0.738 with a stop loss at $0.766, just above the support level. The initial target price is $0.651, aligning with the first forecast price and the lower Bollinger Band. To manage risk and maximize potential gains, I suggest a dynamic target adjustment. If the price reaches $0.651, move the stop loss to the entry price of $0.738. Continue to hold the short position until the price reaches $0.604, the final forecast price. If the price fails to reach $0.604 and reverses, exit the position at $0.651, securing a profit. This strategy combines the downward trend, Bollinger Band volatility, and forecast data to achieve high returns while mitigating risk. Based on the historical data and forecast, STRK shows a downtrend. The price has been consistently declining, and the forecast for the next week indicates further drops. The support price is consistently at $0.147, acting as a potential floor. The RSI has been fluctuating but mostly below 50, indicating weakening momentum. The Bollinger Bands are narrowing, suggesting decreasing volatility. We will implement a short selling strategy to capitalize on this downtrend. Our strategy will be a combination of RSI and Bollinger Bands. We will initiate a short position when the RSI crosses above 50 and the price touches the bottom of the Bollinger Bands. For example, on April 7, 2025, the forecast price is $0.132, and the bottom of the Bollinger Bands is $0.135. We will enter a short position at $0.135. The stop loss will be set slightly above the top of the Bollinger Bands, at $0.138, to protect against unexpected price spikes. The target price will be the support level of $0.147. This strategy aims to capture the downward momentum while limiting potential losses. Based on the historical data and forecast, Solana shows a declining trend. The price has been fluctuating between a support price of $118 and a resistance price of $138. The RSI indicates oversold conditions with values below 40, suggesting a potential for a bounce. However, the forecast predicts a continued downward movement, reaching $115. Considering this, I recommend a contrarian strategy focusing on short-term gains. We will initiate a short position at $124. A stop-loss order will be placed at $124 to limit potential losses if the price unexpectedly rises. The target price will be set at $117, aiming to capitalize on the predicted downward trend. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the bottom band, which could signal a potential bounce. However, given the forecast and the overall downtrend, I will maintain the short position. The entry price remains $124, with a stop-loss at $124 and a target price of $117. This strategy balances the contrarian RSI signal with the bearish forecast and technical analysis, aiming for a quick profit within the established price range. This is a high-risk, high-reward strategy suitable for experienced investors who understand the potential for rapid price fluctuations. Based on the historical data and forecast, Jupiter demonstrates a declining trend. The RSI consistently falls below 50, indicating weakening momentum, and the recent dip to 31.6 on March 31 suggests an oversold condition. The forecast for the next week projects further price declines, with values ranging from $0.448 to $0.372. The Bollinger Bands are contracting, indicating decreasing volatility, but the price is consistently near the lower band, reinforcing the downtrend. Therefore, a short selling strategy is recommended. The entry price should be set at $0.421, coinciding with the forecast price on April 4, 2025, when the price is expected to reach a low point. The stop-loss should be placed at $0.451, just above the lower Bollinger Band on March 31, 2025, to limit potential losses if the price unexpectedly reverses. The target price is $0.372, aligning with the lowest forecast price on April 7, 2025. This strategy aims to capitalize on the anticipated downward trend, with a conservative risk management approach using the Bollinger Bands and RSI as guides. Based on the historical data and forecast, Render shows a generally upward trend, though with some volatility. The RSI consistently fluctuates, but remains largely within a neutral range, occasionally approaching oversold territory. The Bollinger Bands indicate periods of increased volatility and potential price reversals. Considering this, I propose a combined strategy utilizing RSI and Bollinger Bands for optimal returns. Initially, we will enter a long position at $3.4, coinciding with a slight dip and potential bounce back. A stop-loss should be placed at $3.11, just below the established support level, to mitigate potential losses. The initial target price will be $4.04, aligning with the recent resistance level. As the forecast suggests a continued upward trend, we can adjust our strategy dynamically. If the price touches the lower Bollinger Band, indicating an oversold condition, we can consider entering a long position at $3.37. The stop-loss would be set at $3.11, and the target price would be $3.54. If the price touches the upper Bollinger Band, suggesting an overbought condition, we can consider exiting the position. This combined approach, leveraging both RSI and Bollinger Bands, aims to capitalize on short-term fluctuations while maintaining a long-term bullish outlook. Based on the historical data and forecast, Solana name service demonstrates a clear downtrend. The price has been consistently declining from $0.116 on March 18, 2025, to a forecast of $0.0851 on April 7, 2025. The RSI consistently remains below 50, with recent values dipping below 35, indicating an oversold condition. The Bollinger Bands are narrowing, suggesting increased volatility, and the forecast price consistently falls below the center of the Bollinger Bands. Given this trend, I recommend a short selling strategy. Enter a short position at $0.0966. Place a stop-loss order at $0.105, just above the upper Bollinger Band to protect against unexpected upward movements. Set a target price at $0.0851, aligning with the final forecast price. To refine this strategy, we can incorporate the RSI. If the RSI rises above 30 and then falls back below 30, it signals a potential short-term bounce, but the overall downtrend remains intact. Therefore, if the price reaches $0.0966 and the RSI is below 30, maintain the short position. If the price retraces to $0.105 and the RSI is above 50, consider closing the position and waiting for a renewed downtrend signal. This combined strategy leverages both trend analysis and momentum indicators for optimal risk management and high returns. Based on the historical data and forecast, Doge-Coin shows a decreasing trend with a forecast indicating further decline. The price has been fluctuating within a range between $0.155 and $0.178. The RSI consistently remains below 60, indicating a lack of strong momentum and suggesting the asset is not significantly overbought. Bollinger Bands show a contraction, which might signal increased volatility. Considering these factors, I recommend a short position strategy. Entry price should be $0.168, with a stop loss at $0.17 to protect against unexpected upward movements. The initial target price is $0.158, aligning with the forecast. To refine the strategy, I will incorporate RSI and Bollinger Band signals. If the price touches the bottom of the Bollinger Bands, around $0.158, consider taking partial profits. If the RSI falls below 20, indicating an oversold condition, it might be a signal for a temporary rebound. In this case, move the stop loss to the entry price $0.168. If the price reaches the target of $0.158, consider scaling out the position gradually. This combined approach balances risk and reward, capitalizing on the downward trend while mitigating potential losses. Based on the historical data and forecast, PEPE has been fluctuating within a relatively tight range between $0.0706 and $0.00000850. The RSI has been hovering around the mid-range, indicating neither strong bullish nor bearish momentum. The Bollinger Bands show periods of contraction and expansion, suggesting potential breakout opportunities. The forecast data indicates a downward trend, with prices expected to decrease to $0.00000640. Considering these factors, I recommend a short selling strategy with a cautious approach. Specifically, I suggest entering a short position at $0.00000830. Given the downward forecast and the support level at $0.0706, a stop loss should be placed at $0.00000850 to limit potential losses. The target price for this trade is $0.00000660, aligning with the forecast data and providing a reasonable profit margin. This strategy combines technical indicators and forecast data to capitalize on a potential downward movement while managing risk with a clearly defined stop loss. Based on the historical data and forecast, SHIB shows a slightly decreasing trend, with prices fluctuating within a narrow range between $0.00000115 and $0.00000127. The RSI indicates that the asset is currently in a neutral range, generally between 40 and 55, suggesting neither strong overbought nor oversold conditions. The Bollinger Bands have been relatively tight, indicating low volatility. Considering the forecast for the next week, prices are expected to continue decreasing slightly, hovering around $0.00000126 to $0.00000119. Therefore, a conservative strategy focusing on short-term movements within this range is recommended. My recommended strategy is a short position entry at $0.00000126, with a stop loss placed slightly above the upper Bollinger Band at $0.00000127 to limit potential losses if the price unexpectedly reverses. The target price for this short position would be the support level at $0.00000115, aiming to capitalize on the predicted downward trend. This strategy combines the support and resistance levels with the Bollinger Bands to manage risk effectively. A secondary strategy could be implemented if the RSI dips below 20, triggering a long position at $0.00001115 with a stop loss at $0.00000120 and a target price of $0.00000130. Combining these two strategies, the most efficient portfolio will prioritize the short position at $0.00000126, adjusting based on RSI and Bollinger Band signals. Based on the historical data and forecast, Dog with Hat shows a declining trend. The RSI consistently remains below 50, indicating a bearish sentiment. The forecast data further reinforces this downward trajectory, predicting a continuous decline over the next week. The Bollinger Bands are narrowing, suggesting decreasing volatility. Given this analysis, I recommend a short selling strategy. Entry price should be $0.38, with a stop loss set at $0.419 to protect against a potential reversal. The target price for this short position is $0.3, aiming to capitalize on the anticipated downward movement. To refine the strategy, I will incorporate the RSI indicator. If the RSI reaches an oversold level of 20, consider covering the short position. The Bollinger Bands provide another layer of confirmation. If the price touches the lower band of $0.38, it strengthens the short signal. Conversely, if the price breaks above the upper band of $0.565, it signals a potential trend reversal, prompting a reassessment of the position. This combined approach, utilizing RSI and Bollinger Bands, aims to maximize potential returns while mitigating risk, resulting in an efficient portfolio. Based on the historical data and forecast, Doge-Coin shows a downtrend. The RSI consistently hovers around the mid-range, indicating indecision. However, the recent decline in the forecast price, coupled with the bottom of the Bollinger Bands consistently below the current price, suggests a potential further decrease. Considering the support price of $0.00225, I propose a short selling strategy. The entry price will be $0.00235, aligning with the beginning of the forecast period and the current price. A stop loss will be set at $0.00267, just above the recent resistance level, to limit potential losses if the price unexpectedly reverses. The target price will be $0.00208, corresponding to the lowest forecast price. To refine this strategy, I'll incorporate the Bollinger Bands. If the price touches the middle band, we'll reevaluate. If the price breaks below the bottom band, we'll tighten our stop loss to $0.0022. Conversely, if the price approaches the top band, we'll consider covering our short position to secure profits. This dynamic approach, combining RSI analysis with Bollinger Band signals and support/resistance levels, aims to maximize returns while managing risk effectively in this volatile market. Based on the historical data and forecast, Near Protocol shows a declining trend. The price peaked around $3.04 on March 27, 2025, and has been generally decreasing since then. The forecast for the next week predicts a continued downward movement, potentially reaching as low as $2.21. The support price is consistently at $2.29, which could act as a floor. The RSI is currently at 39.4, indicating an oversold condition. The Bollinger Bands are narrowing, suggesting decreasing volatility. Considering these factors, I recommend a short selling strategy. Our entry price will be $2.51. Given the oversold RSI and the downward trend, we will place a stop-loss order at $2.57, just above the recent high. The initial target price will be $2.3, aligning with the forecast and the support level. If the price reaches $2.3, we will reevaluate. If the price continues to decline, we will adjust the target price to $2.21, based on the forecast. This strategy combines technical indicators and price forecasts to maximize potential returns while managing risk with a carefully placed stop-loss. Based on the historical data and forecast, Internet Computer shows a declining trend. The forecast indicates a continuous decrease in price, reaching as low as $4.73. The RSI consistently falls below 50, indicating a weakening momentum. The Bollinger Bands also suggest a downward trend, with the price consistently moving towards the lower band. Given this information, I recommend a short position strategy. We will enter a short position at $5.33. The stop loss will be set at $5.35 to protect against unexpected price surges. The initial target price will be $4.81, aligning with the forecast. To maximize potential returns, we will implement a tiered target strategy. After reaching $4.81, we will move the stop loss to break even, around $5.33, to secure profits and limit further losses. The next target price will be $4.73. If the price reaches this level, we will close the entire position, securing a substantial profit. This strategy combines technical indicators, forecast data, and risk management techniques to capitalize on the anticipated downward trend of Internet computer. The overall strategy is to short at $5.33, stop loss at $5.35, target 1 at $4.81, target 2 at $4.73. Based on the historical data and forecast, Injective exhibits a downtrend. The price has been fluctuating within a range, with a strong support level at $8.66 and a resistance around $9.71. The RSI consistently dips below 50, indicating a weakening momentum. The forecast predicts a continued decline, reaching as low as $7.5. Considering these factors, I recommend a short selling strategy. The optimal entry point is $8.7. Set a stop loss at $8.86 to protect against unexpected upward movements. The initial target price is $7.77, aligning with the lower Bollinger Band and the forecast. If the price reaches $7.77, consider adjusting the stop loss to break even and potentially setting a secondary target price at $7.5, based on the forecast data. This strategy combines RSI, Bollinger Bands, and forecast data for a high probability, high return investment. Based on the historical data and forecast, BTC shows a clear downtrend, particularly evident in the recent forecast prices plummeting from $220 to $185 over the next week. The RSI consistently hovers below 50, indicating a weakening momentum, and has recently dipped below 40, suggesting potential oversold conditions. Considering the forecast, the price is expected to continue its decline. Therefore, I recommend a short selling strategy. Entry price should be $220. The stop loss should be set at $227, just above the upper Bollinger Band to avoid being trapped in a potential short-term rebound. The target price should be $191, aligning with the forecast price for April 6, 2025. To refine this strategy, we'll incorporate the Bollinger Bands. The price is trading below the lower band, reinforcing the downtrend. The RSI nearing oversold territory, around 36 to 40, provides a further signal to initiate the short position. However, the stop loss remains crucial to manage risk. If the price breaks above the $227, immediately close the position to prevent further losses. The target price of $191 is a conservative estimate based on the forecast, but it can be adjusted based on market conditions. This combined strategy leverages both technical indicators and forecast data to maximize potential returns while minimizing risk. Based on the historical data and forecast, THETA network is currently in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast predicting further downside. The RSI consistently below 50 indicates a weakening momentum. Given the oversold conditions and the forecast, I recommend a contrarian strategy focusing on short-term gains. We will initiate a long position at $0.663. The stop loss will be set at $0.608, just above the established support level, to protect against further downside risk. Our target price will be $0.718, aligning with the forecast and offering a potential profit of $0.055. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently trading near the lower band, suggesting potential for a bounce. However, the downtrend is strong. Therefore, we will adjust the target price slightly to $0.742, capitalizing on a potential rebound within the lower Bollinger Band. This strategy combines RSI and Bollinger Band signals with support and resistance levels for a more robust approach. The revised entry price remains $0.663, the stop loss remains at $0.608, and the target price is adjusted to $0.742. This provides a balance between risk mitigation and potential reward. Based on the historical data and forecast, WorldCoin demonstrates a declining trend. The RSI consistently hovers below 50, indicating a generally oversold condition, with a recent dip to 36.7. The Bollinger Bands show a contraction, suggesting decreasing volatility. The forecast data projects a continued downward trajectory, with prices falling from $0.771 to $0.66. Therefore, I recommend a short position strategy. We will enter a short position at $0.771, placing a stop-loss order at $0.752, just above the upper Bollinger Band. The initial target price will be $0.676, aligning with the forecast low. To refine the strategy, we will incorporate a dynamic target based on the RSI. If the price reaches $0.676 and the RSI falls below 20, indicating a strong oversold condition, we will adjust the target price to $0.66. This approach aims to capitalize on the predicted downward trend while mitigating risk through strategic stop-loss placement and dynamic target adjustments based on RSI signals. This portfolio combines the RSI, Bollinger Bands, and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Hooked Protocol shows a declining trend. The RSI consistently remains below 50, indicating a weakening momentum, with recent values hovering around 37 to 40, suggesting it's approaching oversold conditions. The forecast for the next week projects a further decline, with prices dropping from $0.126 to $0.108. The Bollinger Bands are narrowing, which often precedes significant price movements, and the price is nearing the lower band, reinforcing the potential for a downward trend. Therefore, I recommend a short position strategy. Entry price should be $0.126, with a stop loss at $0.132 and a target price of $0.108. To refine the strategy, we can incorporate the RSI and Bollinger Bands. When the RSI dips below 30, it signals an oversold condition, suggesting a potential bounce. However, given the overall downward trend and forecast, I suggest a short position. Enter at $0.126, place a stop loss at $0.13 to protect against a sudden reversal, and set a target price of $0.11, aligning with the forecast and the lower Bollinger Band. This approach balances risk and reward, capitalizing on the expected decline while limiting potential losses. Based on the historical data and forecast, Artificial Superintelligence Alliance has been exhibiting a downtrend. The RSI consistently remains below 50, fluctuating between oversold and neutral levels, indicating weakening momentum. The forecast projects a continued decline, with prices dropping from $0.46 to $0.397. Considering the support price of $0.39, a short position is advisable. We will implement a strategy based on the RSI, targeting the oversold level of 20. Entry price will be $0.46, with a stop loss set at $0.471 to protect against a potential rebound. The initial target price is $0.447, aligning with the forecast. To further refine the strategy, we'll incorporate the Bollinger Bands. The price consistently trades near the lower band, confirming the downtrend. We will add a second target price of $0.397, based on the forecast. If the price touches the support level of $0.39, we will close the position. This combined RSI and Bollinger Band strategy provides a robust framework for capitalizing on the anticipated decline in Artificial Superintelligence Alliance, balancing risk with potential reward. The portfolio will be 60% short position, 20% RSI strategy, and 20% Bollinger Band strategy. Based on the historical data and forecast, Polkadot shows a downtrend, particularly evident in the recent forecast prices declining from $4.13 to $3.81. The RSI consistently remains below 50, with values dropping to the $37 range, indicating a prevailing bearish sentiment and approaching oversold conditions. Considering the support price of $3.87 and the forecast, I recommend a short position strategy. We will enter a short position at $4.02, placing a stop-loss order at $4.05 to limit potential losses if the price unexpectedly reverses. The target price for this short position will be $3.81, aligning with the forecast and support level. To refine this strategy, we'll incorporate Bollinger Bands. The price consistently trades near the lower band, reinforcing the downtrend. Therefore, we'll initiate the short position at $4.02, with a stop-loss at $4.05. Our target price is set at $3.81, capitalizing on the predicted downward movement and the support level. This combined RSI and Bollinger Bands approach offers a robust strategy for potentially high returns in the current market conditions, carefully managing risk with defined stop-loss and target levels. Based on the historical data and forecast, Filecoin shows a downtrend with decreasing closing prices. The RSI consistently remains below 80, indicating it's not in overbought territory, and often dips below 40, suggesting periods of oversold conditions. The Bollinger Bands also indicate volatility, with the price fluctuating between the upper and lower bands. Considering these factors, I recommend a contrarian strategy focusing on short-term pullbacks. Specifically, when the price approaches the support level of $2.75 and the RSI dips below 30, initiate a long position with an entry price of $2.75. Place a stop-loss order at $2.70 to limit potential losses, and set a target price of $3, aiming to capitalize on a potential bounce back towards the resistance level. To refine this strategy, incorporate the Bollinger Bands. If the price touches the lower band of the Bollinger Bands while the RSI is oversold, it strengthens the signal for a potential reversal. For example, on April 7, 2025, the forecast price is $2.59, which is below the lower Bollinger Band of $2.68, and the RSI is likely to be oversold. In this case, enter a long position at $2.59, set a stop-loss at $2.55, and target $2.85. This combined approach, utilizing both RSI and Bollinger Bands, aims to improve the efficiency and reduce the risk of the investment. Based on the historical data and forecast, Conflux demonstrates a declining trend. The price has been fluctuating within a range, but the forecast for the next week indicates a continued downward trajectory, potentially reaching as low as $0.0686. The RSI consistently stays below the 50 mark, suggesting a weakening momentum. Considering the Bollinger Bands, the price is currently near the lower band, which can signal a potential bounce, but the forecast suggests it will continue to fall. Therefore, a short position is recommended. Our strategy will involve shorting Conflux at $0.0794, with a stop-loss placed at $0.0867 to protect against a potential rebound. The initial target price is $0.0707, aligning with the forecast for April 7, 2025. If the price hits this target, we will reevaluate the trend and adjust the stop-loss accordingly. If the price breaks through the $0.0867 resistance, we will immediately exit the short position to minimize losses. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Ethereum name service shows a downtrend. The RSI consistently remains below 50, indicating a bearish momentum, and the forecast price continues to decline. The support price is consistently at $15.7, and the forecast suggests a potential test of this level. The Bollinger Bands are narrowing, suggesting decreasing volatility, and the price is approaching the lower band. Therefore, I recommend a short selling strategy. We will enter a short position at $15.3 with a stop-loss at $16.5 and a target price of $14.1. This strategy leverages the anticipated downward trend and decreasing volatility. To refine the strategy, we will incorporate RSI and Bollinger Band signals. If the RSI falls below 30, we will consider entering a long position at $15.2 with a stop loss at $15.7 and a target price of $16.7. Conversely, if the price touches the lower Bollinger Band, we will consider entering a short position at $15.4 with a stop loss at $15.8 and a target price of $13.6. Combining these signals, we will prioritize the short selling strategy due to the stronger bearish signals, but remain flexible to adjust based on real-time market conditions. Based on the historical data and forecast, Avalanche shows a volatile trend with periods of consolidation and upward movement. The RSI fluctuates between 42.5 and 58.9, indicating neither consistently overbought nor oversold conditions. The Bollinger Bands have widened recently, suggesting increased volatility. Considering the forecast prices are decreasing from 19.7 to 18.5, a conservative strategy is recommended. We will implement a strategy focusing on short-term pullbacks to the support level, utilizing the RSI and Bollinger Bands for confirmation. Our strategy involves waiting for the price to reach the support level of $18.2. We will enter a long position at $18.6, placing a stop-loss order at $17.9 just below the support to limit potential losses. The initial target price will be $19.4, aiming for a quick profit based on the recent resistance levels. If the price continues to move upward, we will adjust the target price to $20.1. This strategy combines the support level, RSI readings, and Bollinger Bands to maximize potential returns while minimizing risk. Based on the historical data and forecast, DeFi exhibits a downtrend. The price has been consistently approaching the support level of $0.022. The RSI values have been consistently below 50, indicating a weakening momentum. The forecast data for the next week projects a continued decline, reaching as low as $0.0197. The Bollinger Bands are narrowing, suggesting decreasing volatility. Therefore, a short selling strategy is recommended. We will initiate a short position when the price touches the support level of $0.022. The stop loss will be set at $0.023, just above the upper Bollinger Band, to protect against a potential rebound. The initial target price is $0.02, aligning with a further decline based on the forecast. To refine the strategy, we will incorporate RSI signals. If the RSI falls below 30, oversold, consider covering the short position to secure profits. If the RSI rises above 50, reevaluate the position and consider a partial exit. The final portfolio will be a short selling strategy with an entry price of $0.022, a stop loss price of $0.023, and a target price of $0.02. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, PENDLE shows a slight upward trend with periods of consolidation. The RSI consistently fluctuates around the mid-level, indicating neither strong bullish nor bearish momentum. The Bollinger Bands have widened recently, suggesting increased volatility and potential for price swings. The support price of $2.5 provides a solid base, while the resistance level of $2.75 caps the upside. Considering the forecast for the next week, which predicts a gradual decline, I recommend a cautious strategy focused on short-term gains. My proposed strategy is a combination of RSI and Bollinger Bands. We will initiate a long position at $2.52 when the price touches the support level and the RSI is below 50, indicating a potential oversold condition. The stop loss will be set at $2.45, just below the support level, to limit potential losses. The initial target price will be $2.65, aligning with the recent resistance level and the upper Bollinger Band. If the price reaches $2.65, we will move the stop loss to the entry price of $2.52 to secure profits and potentially ride further upward momentum. This strategy aims to capitalize on short-term volatility while managing risk effectively. Based on the historical data and forecast, the sandbox shows a downward trend. The support price remains consistently at $0.269, while the resistance fluctuates around $0.298. The RSI consistently stays below 80, indicating that the asset is not overbought. However, the RSI dipped below 40 in the last week, suggesting a potential oversold condition. The Bollinger Bands are narrowing, indicating decreasing volatility. The forecast predicts a continued decline, with prices dropping to $0.241. Therefore, I recommend a short selling strategy. We will enter a short position at $0.271. Given the downward trend and the forecast, our stop loss will be set at $0.281 to protect against a potential reversal. The first target price will be $0.269, aligning with the consistent support level. If the price breaks through the support, we will adjust the target price to $0.241 based on the forecast. This strategy combines trend analysis, support and resistance levels, and the RSI indicator to maximize potential returns while minimizing risk. The RSI reading of 39.5 suggests a slight oversold condition, potentially offering a good entry point for a short position. Based on the historical data and forecast, Decentraland demonstrates a downtrend, particularly evident in the recent forecast prices, which predict a decline to $0.22. The RSI consistently hovers around the 40 to 50 range, suggesting neither strong overbought nor oversold conditions. However, the Bollinger Bands indicate increasing volatility. Given the forecast's downward trajectory, I recommend a short position. Entry price should be $0.246, setting a stop loss at $0.25 to protect against unexpected upward movements. The initial target price is $0.232, aligning with the forecast. To refine this strategy, we'll incorporate a dynamic target based on the Bollinger Bands. If the price touches the lower band of $0.222, we'll adjust the target to $0.22. This approach allows us to capitalize on the predicted decline while mitigating risk with a well-defined stop loss and adapting the target based on real-time market behavior. The final target price is $0.22. This strategy balances risk and reward, leveraging the forecast and technical indicators for optimal returns. Based on the historical data and forecast, Doge-Coin demonstrates a downtrend, particularly evident in the recent forecast prices which consistently decline. The RSI fluctuates around 40, indicating neutral to slightly bearish momentum. Bollinger Bands show price fluctuations within a narrowing range, suggesting decreasing volatility. Considering these factors, a short position strategy is recommended. We will initiate a short position at $0.0827 with a stop loss placed at $0.083, just above the upper Bollinger Band to mitigate potential upward spikes. The initial target price will be $0.0749, aligning with the forecasted price for April 6, 2025. To refine the strategy, we'll incorporate RSI signals. If the RSI drops below 30, oversold, consider covering the short position partially at $0.0766. Conversely, if the RSI rises above 60, overbought, tighten the stop loss to $0.082. This dynamic approach allows for capitalizing on short-term reversals while maintaining a bearish outlook. The portfolio will prioritize the short position, allocating 70% of available capital, with the remaining 30% held in cash to manage risk and potentially re-enter the market at a more favorable price if the downtrend strengthens. Based on the historical data and forecast, Uniswap shows a downtrend with a decreasing center of the Bollinger Bands. The RSI consistently stays below 50, indicating a weakening momentum. The forecast for the next week predicts a continued decline, with prices potentially reaching $5.25. Considering the support level at $5.87, I recommend a short position strategy. The entry price should be $5.9 on April 1, 2025, Tuesday. Set a stop loss at $6.05 to protect against unexpected price reversals. The initial target price is $5.55, aligning with the forecast and the lower Bollinger Band. To maximize returns, I suggest a dynamic approach. Once the price reaches $5.55, adjust the stop loss to break even to secure the initial investment. Then, set a second target price at $5.25, based on the forecast low. If the price continues to fall below $5.25, consider adjusting the strategy to a trailing stop loss to capture further potential gains. This portfolio combines a short position based on the downtrend, supported by RSI and Bollinger Bands, with dynamic stop loss and target adjustments to optimize risk-reward ratios. Based on the historical data and forecast, Chainlink shows a downtrend. The RSI consistently remains below 80, indicating it is not in the overbought territory. However, the recent values hover around 40, suggesting a potential oversold condition. The Bollinger Bands are narrowing, which often precedes a significant price movement. Considering the forecast price decreasing to $12.1, I recommend a contrarian strategy. We should enter a long position at $12.3. The stop loss should be set just below the support level at $12.8 to limit potential losses. The initial target price should be the resistance level at $15.5, aiming for a substantial profit. To refine the strategy, we can incorporate the RSI and Bollinger Bands. If the RSI falls below 20, confirming an oversold condition, we can consider a long position at $12.5. The stop loss would be placed at $12.3. The target price would be $13.6. If the price touches the lower Bollinger Band, we can also consider a long position at $12.1. The stop loss would be set at $12.3, and the target price would be $13.4. Combining these three strategies, the most efficient portfolio would be to enter a long position at $12.3 with a stop loss at $12.8 and a target price at $15.5. Based on the historical data and forecast, Aave exhibits a declining trend, particularly evident in the recent forecast prices which predict a consistent decrease. The RSI consistently remains below 50, hovering around the oversold level of 37 to 46, suggesting the asset is undervalued. Furthermore, the price has tested the support level of $141 multiple times, and the Bollinger Bands are narrowing, indicating decreasing volatility. Given this information, I propose a contrarian strategy focusing on a potential bounce from the support level. We will initiate a long position at $159, placing a stop-loss order at $141 to mitigate potential losses if the price continues to decline. Our target price will be $168, aiming to capture a modest rebound from the oversold condition. To refine the strategy and maximize potential returns, we will incorporate Bollinger Bands analysis. If the price approaches the lower band while RSI remains oversold, it strengthens the buy signal. For example, on April 7, 2025, the forecast price is $143, which is near the bottom of the Bollinger Bands. In this scenario, we can consider entering a long position at $143, with a stop loss at $141 and a target price of $159. This combined approach, leveraging both RSI and Bollinger Bands, offers a more robust and adaptable investment strategy for Aave. Based on the historical data and forecast, EOS shows a slight upward trend. The price has been fluctuating within the support price of $0.579 and the resistance price of $0.644. The RSI values are generally between 50 and 60, indicating neither strong overbought nor oversold conditions. The forecast for the next week predicts a continued upward movement, with prices ranging from $0.596 to $0.614. Considering the Bollinger Bands, the price has been relatively close to the upper band recently, suggesting a potential for a pullback. I recommend a long position strategy with an entry price of $0.596, a stop-loss price of $0.579, and a target price of $0.614. This strategy aims to capitalize on the predicted upward trend while limiting potential losses. To refine this strategy, I will incorporate RSI signals. When the RSI falls below 20, oversold, it signals a potential buying opportunity. Conversely, when the RSI exceeds 80, overbought, it suggests a possible selling point. In this case, the RSI has not reached either extreme recently. Therefore, I will maintain the long position strategy with an entry price of $0.596, a stop-loss price of $0.579, and a target price of $0.614. This strategy combines the forecast data, support and resistance levels, and Bollinger Bands to maximize potential returns while minimizing risks. The portfolio will prioritize this long position, allocating 70% of the investment capital. The remaining 30% will be held in reserve for potential adjustments based on real-time market conditions. Based on the historical data and forecast, Tron shows a slight upward trend, consolidating within the support of $0.232 and resistance of $0.244. The RSI fluctuates around 50, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing, suggesting a period of consolidation, but the forecast indicates a potential breakout. My strategy will be a combined approach leveraging RSI and Bollinger Bands. I will initiate a long position when the price touches the support level of $0.232, coinciding with a potential RSI oversold signal, below 30, though not currently observed. The entry price will be $0.232. The stop loss will be set just below the support level at $0.231 to protect against a potential breakdown. The initial target price will be the resistance level of $0.244, representing a potential 12% gain. To refine the strategy, I will incorporate Bollinger Bands. If the price touches the lower band, $0.216, it strengthens the RSI oversold signal, and I will enter at $0.216 with a stop loss at $0.215 and a target at $0.244. If the price breaks above the upper band, $0.243, it suggests a strong upward momentum, and I will consider a secondary target of $0.245. However, given the forecast data, I anticipate the price to reach $0.243 by April 7, 2025. Therefore, the primary strategy will be to enter at $0.232, with a stop loss at $0.231 and a target at $0.244, adjusting the target to $0.245 if the upper Bollinger Band is breached. This combined RSI and Bollinger Bands approach offers a balanced risk-reward profile, capitalizing on both technical indicators for optimal returns.